All right, Queen here. Greetings, fam. We're going to take a deep dive here in this video training. Really, this is a entire training that I'm about to give to you absolutely free so that you can understand how to monetize insurance as well as bank contracts using Bitcoin. And we're going to talk about how the cryptex program actually works and where does the money come from. All right, so I pulled up some information here online. Let me go to that so that you can understand what we're talking about. All right, if you put into Google leveraging insurance policies, you'll get a whole leap of different information that will explain to you here in a nutshell what I'm about to explain. So this particular, this is Safe Pacific. I don't know any of these websites. I'm just merely giving you third-party collateral validation to what we're talking about. This particular article talks about how to leverage your whole life insurance policy as collateral for a loan. All right. So now let me actually show you the players here before I get into this. Let me go back to this, and let me go back to this and here. All right, so these are my notes. All right, and if you're taking notes, I want you to draw a triangle. This is how I explain this to people. Okay, take a piece of paper out and draw a pyramid. Right, we know the most energy from a pyramid comes off the top cap, and that is you, the wallet holder. Okay, and then to the right, at the bottom of the pyramid, we have the bank. To the left, we have the insurance company. So these are the three key players that we're going to discuss. All right, the wallet holder, which is you at the top, which is getting the most benefit because you're at the top of the pyramid. Down to the bottom at the right is the bank. Down to the left is the insurance company. Okay, all right, so we'll get out of here and then we will come back here in a moment. So now let's go back here and let's talk about, in this article, they're sharing with you how to leverage your whole life insurance policy. So if you have an insurance policy, you have a life policy, that policy, that is a contract that can be monetized and utilized for capital, right? So this article says, did you know that you can use a whole life insurance policy as collateral for a loan? This can be a great option to finance your business or other investments. 2 loan source options. The first way that you can borrow is from an insurance company, typically where you got the policy from in the first place. This is called a policy loan. Simple to do, right? Second way is to leverage your policy with a third party like a bank. Okay, so understand, the first thing I want you to understand is that this is not anything new. This has been going on for eons, since insurance was created. Life insurance and contracts and policies was created. Okay, so this is not anything new that cryptex is doing. Okay, and I'm going to pull all of this together for you so that you can really unpack what's going on, because people don't believe, or they can't fathom the amount of money that they're able to generate with this program and with monetizing insurance contracts and bank contracts. Okay, this is really all I really wanted to go over here on this particular page, but it just basically, and if you do have a life insurance policy and whole life or whatever, and you need to monetize it, and you didn't know this information, then here you go. This is something you could possibly utilize. But we're not going to be talking about you necessarily monetizing your own current life insurance policies. I just want you to understand that that concept exists, and it has been existing for a very long time. Okay, all right, so that's that. Now let's go and talk about the banks. Okay, what is their secret? How do they make money? Why do banks buy life insurance? Okay, we're going to dig into this article. This was one of the best that I found on the subject. Put simply, BOLI is attractive to banks because it can produce better returns that the banks couldn't otherwise achieve. Bank-owned life insurance, that's what BOLI means. It's a little known way that banks make money. All right. So, talks about where do you save money? Many people, the answer is a bank. So it surprises people to learn that one of the places banks store and grow their cash is outside of the banking system altogether. Okay? Banks store and grow a significant portion of their capital using permanent life insurance, generally a special kind of whole life insurance. It's referred to as BOLI, right? And banks own a lot of it. In this article, we're going to explain why banks buy life insurance, how much they have, and why it's relevant to you. Life insurance is the banker's secret bunker. This, I'm not going to read those first too. But anyways, around the start of the financial crisis, banks accelerated new purchases of this old-fashioned product. Life insurance brought stability, protection, and growth during unpredictable times. During the Great Depression, BOLI outperformed both stocks and the safe assets that banks sell to their customers, without risk of fractional banking or market volatility. This year, BOLI assets reach $180.5 billion and counting. Now, this article is only focusing on the United States. The insurance companies and banks that we utilize, they're private. Everything is anonymous, obviously, with this particular opportunity and this program that I'm going to share with you, how to do this monetization. Everything is anonymous. So it is said that the insurance companies and some of the banks that we use are in the U.S., and then there are a lot that are outside of the U.S. Okay. All right. Let's go down here. Why do banks buy life insurance? And I am going to put the pointer here so you can see exactly where I am. Why do banks buy life insurance? Banks buy life insurance because it offers benefits not available through their own products and institutions. Bank products have low rates and are taxable, while life insurance offers guaranteed growth, tax advantages, and an opportunity to shore up balance sheets with an asset so reliable it can be used as collateral. There is no bank in the history of over 200 years that there's no insurance companies that over the history of 200 years have not paid out dividends and any claims that they had to, right? They've always paid out. They've never failed. So you're talking a win-win all the way around. And I'm going to make this make a whole lot of sense here for you, but I want you to understand and get the nitty-gritty of how this thing actually works. People feel like because they are not aware of a certain thing that it doesn't exist, and that's just silly. Okay, that's silly. I've been studying money, studying uniform commercial code and commerce, for over a decade, and there's so many different ways that contracts are monetized for cash, right? That is ridiculous. If you're in the States and you have a birth certificate, that birth certificate is monetized and it's actually traded on the stock market for cash. You're just not getting any of the proceeds. But anyway, we'll show you. I don't want to get too deep, but we'll show you here how to monetize, and you can make up for all of that cash that other folks have been making on your sweat, labor, incarnation. Yeah, we'll get to that. So, let's see, where am I? Okay, yeah, I wanted to go to this next. Let's go to this next paragraph here. And then I'm going to tie this together even more. Okay, so banking on a return. The most common reasons cited by bankers for purchasing BOLI, again, which are life insurance policies, are that it provides competitive returns with superior credit quality, reports thebankdirector.com. According to BOLI.com, BOLI returns typically exceed after-tax returns of more traditional bank investments such as municipal bonds, mortgage-backed securities, 5-10-year treasuries by 150 to 300 basis points, right? Or that's 1.5 to 3% annually. 1.5 to 3% may not sound a lot to you, but when you have billions of dollars and you're getting 1.5 to 3% annually on that amount of capital, it's yeah, we understand why banks exist and why insurance companies exist. Okay, so let's get back to here. Again, I want to bring to your attention this whole triangle, right? So you got, remember, the wallet holder, that's going to be you. I'm going to explain what that is. Now, I've explained to you insurance companies, right? Why would an insurance company want to create a policy and then give that policy as collateral to a bank? So you have an insurance company, they have policies. You have banks, they want these life insurance policies. So it's a win-win situation. Insurance companies, they want to write policies. That's how they make money. Banks, they make more money by buying, right, insurance policies. It's a win-win situation. So how do you fit in this scenario? Well, you fit in this scenario with a little community, and I'm saying little. They've been in existence since 2016. But, oh, actually, before I get there, I want to also talk to you about this. But this little community called cryptex, right? So cryptex allows you to become a wallet holder, and they allow you to basically leverage or monetize the insurance contracts and the bank contracts. How do they do that? Okay. Every wallet holder is allowed to purchase a 3, a 5, a 7, or a 10-year contract, right? Now, each contract, doesn't matter if it's a 3, a 5-year, 7-year, or a 10-year, each contract is only $100. When you purchase a contract, let's just say you do one, just for this example, right? You become a wallet holder. You create your wallet for free, okay? You purchase one contract for $100. So you take $100 worth of Bitcoin, you deposit it into your wallet here with cryptex. You buy one contract. When you purchase one contract, the insurance company is going to create a life policy on that contract. You don't need to go to the doctor. You don't need to get a medical exam. You don't need to do any of this. All of this is anonymous. And the contracts, the smart contracts that makes this work is all done via blockchain technology. Okay? And I'm going to explain more of that to you as well, just in case you don't understand that. But I just want you to follow me here on this. So you have one contract. The insurance company, they create a life insurance policy on that contract. Now they have a life insurance policy that they've created. They just created money for themselves. Remember, every insurance company, what are they in business for? They're in business to create policies. Okay, so they have a life insurance policy they created. They now take that life insurance policy, they put it up as collateral with the bank. Okay, remember, what does the bank want? The bank wants to buy life insurance policies. So they put that policy up as collateral with the bank, and the bank will make a loan on that policy. Okay, the bank will make a loan on that policy. So in this example, we're gonna talk about how we're just gonna concentrate on the 3 and the 5 year, and then I want to go back to how all of this actually makes money. Okay, but just follow me with the contracts right now, because I want you to get this concept. So we have what's called, or cryptex has what's called a DeFi 36 contract, right? That's a 3-year contract. Remember, every contract is $100. Every contract is $100. That's in US money. So every contract, $100. Doesn't matter if it's a 3-year, a 5-year term, a 7-year term, a 10-year term. Doesn't matter. Every contract is $100, right? So you have one contract, in this example that I'm talking about, it's a DeFi 36. That's what they title it. Contract that you give. Now, because this has happened, the insurance company has created a life policy. They put it on collateral with the bank, right? Now the bank has loaned $30,000 and $240 worth of capital for that contract. This money $30,240 goes into your wallet within the cryptex platform. Okay. If it's a DeFi 60, which is a 5-year contract, your starting staking balance, I'm going to explain what this staking stuff is all about. Your starting staking balance, the bank would loan on that particular contract $43,200. Okay. These numbers are very important, and I'm going to again bring all of this home for you so that you can fully understand. All right. And I'll come back to this part here after I truly go further into what DeFi staking is. So let's do that right now. We'll come back to cryptex. All right, so now, first off, I want to say this just from my own personal knowledge and experience in dealing, again, in commerce, in monetization of contracts and all of that. This has been going on forever. Before blockchain, before Bitcoin, this has been going on. Typically, to actually play and make these types of returns, you would typically have to have a minimum of $250,000 tranche. That's what they call it, right? So it typically would be out of reach for the ordinary investor or the ordinary individual. So what cryptex has done, they've actually made it very affordable for the average person, because they put all the players together where you don't have to necessarily come up with the capital yourself. That is, you're literally leveraging that $100 into, either a 30 grand or 43 grand loan that you will never pay back out of pocket. It comes out of your profits, which I'll show you how that happens. Okay. So now, but let's talk about what staking is in the cryptocurrency and the blockchain ecosystem. Let's talk about what DeFi staking is. This is a really, really good article. It's really, really thorough. I think seems like I wrote this article myself. But anyways, DeFi staking, a beginner's guide to proof of stake coins. In 2020, staking emerged with the cryptocurrency space, introducing new opportunities as alternatives to the traditional financial markets instruments. The rise of decentralized finance, which is nicknamed DeFi, materialized in 2020, but the concept dates back to the inception of Bitcoin, which sought to replace established intermediaries and trust mechanisms. Now, if you're familiar with my story, I started in Bitcoin back 2012, right? So I remember, how this DeFi space was forming back in those days, and we had to put up our own capital, right? So you had to put up your own capital to get these DeFi staking rewards, right? So, the beautiful thing about this now is that cryptex have come along and put the pieces together again so that the average investor can monetize these contracts utilizing Bitcoin, utilizing DeFi, utilizing blockchain, and literally, generate wealth. Okay, back to the article. It signaled a new era for the crypto universe geared toward a new internet-native financial system using blockchains to help investors turn the simple ownership of crypto assets into lucrative passive income through staking. DeFi staking works through smart contracts. Remember, I said something about that earlier. Smart contracts, these are pieces of code representing automated financial agreements between two or more parties that offer excellent incentives for crypto enthusiasts willing to stake, which is lock up, their assets and engage in a more active presence in the network. So literally, all that we're doing is, number one, to get the capital, because you've got to have a decent sized amount of capital, in order for this thing to materialize in any true form, within a short time frame, right? So we're talking 3-year contracts, 5-year, 7-year, 10-year. Our 10-year contracts are pending. They're not available just right now. Okay, so they've put the pieces together to, number one, give a person the capital that they need, right? And then also, you don't have to necessarily go out there and try and figure out, which exchanges, these are crypto exchanges, that you can stake with and all of this kind of stuff and all of these hoops, right? They've simplified this whole process. It's really, it's ingenious to me. It's amazing. It's amazing. Okay, so anyway, let me take a sip real quick. Okay, let's get back to the article. All right, DeFi staking aims at encouraging long-term participation in a blockchain network. This article will help you to understand how you can use your cryptocurrency assets to generate passive income and participate in securing the network, validating nodes, and verifying blocks and transactions. So what is DeFi staking? DeFi staking is the process of locking crypto assets into a smart contract in exchange for rewards and generating passive income. The crypto assets that can be staked are fungible tokens or non-fungible tokens, which is NFTs, and the rewards usually correspond to earning more of the same. It's a great way to incentivize cryptocurrency investors to hold on to their assets while earning high interest. DeFi staking is more attractive to investors who can benefit from higher rewards than a traditional savings account, yet it comes with higher risk coupled with more considerable challenges the crypto markets unveil, such as the well-known volatility across the board and network security and novel blockchains. I'm going to show you how we really don't have any risk. I mean, your risk would be your $100 per contract. That would be your risk outlay. And I'm going to show you how it could possibly make logical sense for you to risk that $100 or several $100. Anyway, back to the article. This new financial tool has become increasingly popular because it doesn't require particular trading. You don't have to know how to trade or technical skills. An investor's most significant challenge might be choosing the right and secure platform. This is where I was telling you, because of the cryptex platform and community, they've already done that legwork for us. So you don't have to worry about, they've already got the different platforms in place. Literally, you don't have to do that legwork, okay? Like we had to do back in the day, if you were an early Bitcoin adopter. We had to do all of this stuff and do due diligence on each platform, lose a whole bunch of money, make a whole bunch of money, lose a whole bunch of money again. Like they've taken all of that out of the equation, okay? So unlike proof of work blockchains, which use extensive computational power to verify blockchain transactions, DeFi staking is based on proof of stake networks, where transactions are verified by validators who are the principal stakers of the network. Okay. How does DeFi staking work? Let me see where I am on my time here. Okay. All right. I don't want to be so long in this explanation. I want to get to the money. I know each of you are probably wanting to show me how to monetize this thing, show me how to make money. Gotcha. But I want you to fully understand, the interworkings behind it. Because again, if you tell a person, hey, you can turn $100, into 30,000, they're gonna, think you're crazy, right? But when you understand all the intricate details, it makes better sense. Okay, so how does DeFi staking work? Staking is inherently related to POS blockchain networks, where users lock up a specific amount of the platform's native tokens or coins and become validators. POS blockchain protocols rely on validators to secure the network and verify transactions and blocks. Therefore, these validators play a significant role in the ecosystem. So we are the wallet holders. That's me and you, right? We are a very intricate part of this whole thing to make it work, because there has to be an individual, right, before a life policy can be created, before it can be deposited as collateral with the bank and then monetized, right? So we are an intricate part. So And we are also the validators. I want you to remember that word too. The validators, okay? Or your contract is a validator. Your money that the bank loaned for the contract that you purchase is a key part. Validators who stake their assets to secure the network are incentivized to perform diligently and are tasked with reliably validating transactions and blocks or risk losing a portion or all of their staked assets. Staking may require a high stake deposit, which can be unattainable for most participants. Exactly. That's what I'm saying. See, out there in the crypto ecosystem, most of your validators are hedge funds, they're banks, they are large, institutional investors. They're people that, would sniff at $250,000 a tranche. That doesn't make, that's small change, right? So again, cryptex has put this concept together and this protocol and this wallet and all of these players for the average individual, right? And just so you know, a little bit of background. Again, this is not a new thing just because it may be your first time hearing it, okay? They have been under the radar because it's not a publicly advertised or a public thing. I'm talking about the whole cryptex platform. They've been in operation since 2016. The group that I belong to, they go back as early as 2018, right? And if you look at the previous video above, where I go into detail about the program and so forth, showing you proof, where people are withdrawing large sums, of money back off of $100 contract that they leveraged, you can see that those date back as early as 2018. Okay, so this is not a new thing. It's not something that they're trying out. It is working, has been working since 2018, and there's proof that people are pulling out these large sums of capital in Bitcoin just by leveraging $100 per contract. Okay, so again, something that's been out of reach for the average investor has come to, because of the invention of the blockchain and Bitcoin, it has come to where we can have the pieces of the puzzle, put together where we can participate. Okay, the smaller investor can participate. So, for example, when Ethereum switched to POS consensus mechanism, the need for validators to participate will be 32. So this was probably, they wrote this before Ethereum has switched. They have since already switched. So if we just look at, who could be a validator for the Ethereum network, let's look at this. Okay. So let's say Ethereum's at 2,000. We're just saying that for round numbers. I think it's about 1,900 or something. All right. So 2,000 per coin times 32. Right? So that's $64,000 a person would have had to put up if they wanted to be an Ethereum validator, right? And staking, right, their Ethereum, staking their capital, right, to help the consensus of the network to receive daily rewards. They would have had to put up 64 grand, right? Out of pocket. Okay? So I'm going to show you how you can leverage $100 contracts and do the exact same thing. Now, for this reason, validators as a service and staking pool emerged as DeFi staking service providers to allow more people to participate without incurring substantial financial conditions. All right, we're going to read this next little part and then we're going to get on with it. Staking pools allow people to join other crypto investors to raise staking capital, right? Staking pools allow people to join other crypto investors to raise staking capital. Participants can then deposit any amount of tokens to a staking pool and start earning passive income proportional to the amount on their holdings. Okay, so now with the cryptex platform, all right, we don't have to worry about, purchasing individual coins and, trying to figure out which platforms that we can stake our coins on, which platforms are real, which platforms are not going to rug pull and run off with your crypto. We don't have to figure all of that stuff out. They've already done that for us. Okay, so now let's go to cryptex and look at their frequently asked questions. Okay, so I'm on Cryptex website now. So we're going to just read through some of this, and then I'm going to go back to my notes, and then I'm going to show you a snapshot of my dashboard and show you the intricate details, right, of each of the contracts and how much detail you get on each of the contracts. Okay, I'm going to share that with you. So first off, Cryptex is a unique hybrid decentralized finance instrument. Okay, that's the first thing. And I'm not going to read. You can see all these different things here. I'm going to pick out some of these to read to you. And this is, again, Cryptex gives the little guys and gals a chance. Massive whales own most Bitcoin. That is true. That is true. And I know some of those whales. People call me a whale. I am not a whale compared to people that I know that have massive amounts of Bitcoin, where they were mining it when it was 10 cents. Okay. Uncensorable. No active DeFi smart contract can be frozen, cannot be shut down. Now, we are told that with each of these contracts that we're leveraging, that pretty soon they're upgrading the whole Cryptex platform. So it's going to Cryptex 2.0. So pretty soon we will be able to see, right? You will be able to see your contracts, right, on the blockchain. You'll be able to see that right on the blockchain. So you don't have to feel like, oh, well, this is a scam. This is not real. This can't be true. You know, like, yeah, you'll be able to see it. Okay. And hopefully you are not in that mindset with the background info that we just went through. So you know how the money's being made, right? No KYC. Remember, I told you that this platform is a anonymous platform. The insurance companies are anonymous. The banks are anonymous. And your own wallet, when you create a wallet, that is anonymous, because the only thing that you're utilizing when you create a wallet is your name. I'm sorry, why did I say name? Not your name. An email address and a password. That's it. Now, if your name's in your email address, you know, there it is. But I don't recommend you to have your name and your email address when you're dealing with crypto. If you do have one of those type of emails, go to Proton Mail and make you up a different email address and use that for all of your crypto things, especially here as well, if you want to maintain your anonymity. Okay, so there are no, government reportings or 1099s like they have in the States. There's none of that. All right, totally anonymous, no KYC. This was one of the things that I really, when I was digging deep into this, I love this concept, because even though we don't know exactly the people behind the whole Cryptex protocol, you can tell that they're people that have good hearts. It says each contract helps the planet. Earn and help our planet. Each contract helps to generate more profits. Together, we spend 2%, right? So 1% Cryptex gives out of their pocket, and then 1% we give out of our daily, annually, yearly proceeds that we're making by staking. But it never comes out of your pocket. It's coming out of the staking rewards, which I'm going to show you what that looks like in the dashboard. But it comes out of those proceeds to do what? To plant trees, right? To help, Mama Earth. That's huge. That's huge. 100% transparent. We talked about that. No hidden fees and cost. And Cryptex has removed the middleman in this whole process. They've removed all of that for us, and you have a complete privacy as well. And then there is a referral program that's attached to this. I'm not going to go into that right now. Again, the video above this video, where I explain from A to Z the whole thing, you can I go into detail about the referral program. If you want to refer like your family and your friends, there's just even more wealth that you can create. Okay, so now we've got all of that out of the way. So you understand now. Let me go back to this. All right, let's go to presentation. Okay, so now you understand you are the most important piece of this puzzle. You are the wallet holder. You've got the bank that needs you, and you've got the insurance company that needs you, right? So again, let's go through these bullets here. The insurance company creates a life policy on every contract that you hold. They don't need any information from you, your age, your weight, if you smoke. They don't need any of that, right? So they're creating a life insurance policy on your contract that you purchased, okay? They're then leveraging that insurance policy by putting it on collateral with the bank. And they are then giving you a loan, right, of $30,240 if you do a 3-year contract, or $43,200 if you do a 5-year contract. Now, what the people that I work with, like I said, they've been involved in this platform back as early as 2018. They recommend the preferred plan, which is a maximum of 20 contracts that any one wallet holder can have. And how that's distributed is like this. When you create your wallet, they have like an introductory thing, and I'm not sure how long they're going to have that, whereby you buy 10 3-year contracts, right, which is $1,000. They will give you 5 free contracts. So you're getting 15 contracts for the price of 10, right, which is $1,000. So you have 15 contracts there. Those are 3-year contracts. Then, to maximize the number of contracts that you can hold in your wallet, you buy 5 more contracts. But this time you buy 5 individual 5-year contracts, okay? So that's 5 5-year contracts. That's another $500. So remember, each contract is only $100. So you have invested $1,600 in this preferred plan that, like I said, folks that have been involved in this have been successful in doing this, that they recommend, okay? Now, can you just buy one contract? I know somebody is listening to this and asking me, can I just buy one contract? I don't have $1,600 or $1,500. I say $1,600 because that's the example I give in the previous video, because there's little, Bitcoin fees or whatever when you transfer. Anyways, you can see all that stuff in the other video. They say, well, can I just buy one contract? Because that's all I have. Can I just leverage one $100? And the answer is yes, you can. Okay, but I'm gonna give you some numbers here based upon the preferred plan that I just went over that's recommended. Okay, so we're gonna look at investing in the preferred plan of 20 contracts is going to give you a staking balance of $669,600. So this is the balance that you will start earning on every single day, 7 days a week, 24 hours a day, because crypto does not sleep. Bitcoin does not sleep. And these gains or rewards will be compounded every single day. Your insurance premiums, your loan interest payments are all taken out of your proceeds where you're earning money every single day. You will never ever come out of pocket to pay any of those fees. Now, I'm going to show you that this is absolutely the truth that I'm sharing with you. So now this is a snapshot of my active contracts. Okay, so I purchased so far 22 contracts. Okay, so I went a little bit over what they said, because ordinarily you could only have 20 contracts per wallet holder for a time, and we don't know when that time is going to change. They're allowing one wallet holder to have up to 50 contracts. Okay, up to 50, and I'm going to get up to 50. I'm going to purchase the remaining so I can get the maximum amount. Okay, but again, if you just do the example that we shared, with the $1,500 investment, you're going to still come out very well in 3 years and then in 5 years. Okay, even if you started with only one contract. Okay, because you can always come back and you can add more contracts. All right, so now because I started, and this is the most recent, I just pulled this snapshot today. So my total staking balance right now is $701,219 US dollars, right? And my loan balance, okay, so this is the amount that I have been loaned by the bank for all of my contracts, is $699,840. All right, so that's my loan that I received from the bank for each of the contracts. All right, so now if we look to the right here, now this is, well, let's stay on this left side. Okay, we're going down this side. So active staking balance. So these are all of my 3-year contracts. This is a total here, $483,840. And this is the total for all of my 5-year contracts, $216,000. And then what you see up here in red, that's both of those totals. Now, if we look at the most recent profit from staking, where's my pointer? I lost my mouse. Okay, there it is. All right, the most recent profit from staking actually is right here. Is the $743, right? So each day your contracts are staked. They're staked for the 3, the 5, the 7, 10 years, right? But each day you're earning on the amount that you have staked, you're earning 0.1% up to 0.3% every single day. All right, and your policy fees, again, your insurance premiums, because this is real. This is not just some made up stuff here. Okay, so premiums have to be paid on a policy, right, in order to keep that policy active. So those premiums that are being paid, they're being paid out of your staking profits. The loan interest that comes due every year from the bank, okay, that's being paid out of the profits. Okay, nothing is coming out of your pocket. The only fees that we have as a wallet holder is we have a 3% conversion fee when we initially make a deposit into the cryptex platform. There's a 3% deposit fee. Okay, now when we make a withdrawal, whether that be from a matured contract or if we decide to refer our family and friends, in which I go into detail in all of that. If you're interested in that, you don't have to do that, right? But if you're interested in referring your family and friends, there's like a whole referral program it's insane. Okay, that's in the other video. But the withdrawal fees from matured contracts or from rewards where you've referred people, there's a 3% fee from that. So those are the only fees that you will encounter. 3% on your deposit, which is a conversion fee, and then really it's a conversion fee on the back end as well, because we're converting, we're going from USD to BTC, BTC to USD, right? So that conversion fee. Now back to this, and then we'll be done, because I think I've explained this pretty thorough here. So this is just showing on my individual, this is the total up here, right, in green. This is the total of all my staking profits thus far, and then it itemizes it by the 3-year contracts or the 5-year contracts so that you can see that. Now what I did want to show you was where the actual fees come out for the insurance and for the loan interest. So let me log in here. Let me pause this real quick so I can log in, and then I will show you. Okay, so I am logged in, and we are going to, let's just make sure I'm still recording, and I am. Okay, So now let's dig in here. I don't really remember where it is, but I'm going to dig in and see. I think it's beneath this. Yeah, I think it's here. Yep, there it is. Okay, so all of this data is available to you, and like I said, we'll be able to soon see this on the blockchain. We'll be able to see our smart contracts, how many contracts we have, all of that data, we'll be able to see it. So now, if you look here, this is one of the which contract is it? Oh, so this is a 5-year. See the balance there, 43,200. So this is a 5-year contract. Here's where you see the monthly fee, the insurance premium is $300. The monthly handling fee is $30. The loan interest per year is $2,300, right? It's showing me the start date of my contract. It's showing me the contract end date, the last profit, the total profit, all of those things, right? All of this is available to you. Now, did I come out of pocket to pay any of these fees? Absolutely not. Absolutely not. Okay. This came out of the proceeds from my staking. Okay. So, hopefully you understand or have a better understanding of what this is all about, how you can monetize insurance and bank contracts using Bitcoin, and how the cryptex platform actually helps you to facilitate that whole deal. So again, if you want more information, again, the top video there on the page is going to give you that. If you're not on the page and you've come across this video some kind of way, then look in the description of this video and you can get the link to the other video. You can also get a link if you want to create an account and you want to try the platform out. Okay, so I hope this has helped you and enlightened you on different ways that you can now again monetize insurance and bank contracts just like the big boys and the big girls do, but you don't necessarily need to have the $250,000 capital per tranche. All right, peace and blessings. I will see you in my next videos. One last thing I forgot to share with you is what the numbers actually look like at the maturity of the 3-year and the 5-year contracts. Okay, so on the 3-year, your return, these returns that I'm sharing with you, these are net proceeds. So that means all of your premiums, all of your loan interest payments have been paid out of your daily profits from the DeFi staking. So on a 3-year contract, the return would be $35,097. On a 5-year contract, the return would be $471,487. Okay, so remember, the total amount that each wallet can have is a maximum of 20 contracts. Right now, you're allowed to have up to 50 contracts maximum, and we are not sure how long that's going to last, but right now you're able to have up to 50 contracts. Okay, I just wanted to make sure that I added that information to the video so you can kind of come full circle to see how many contracts you may want to invest in. And I will say this disclaimer, obviously I'm not your financial advisor. Any and all investing is 100% risk, so only use, if you decide to join this platform, only use investment capital that you are comfortable living without. All right, I'll see you in the next videos.